Good afternoon, everybody. This is Ryan Sean Adams. I am today's moderator. We got something exciting for you. This is the Solana Q2 quarterly report. I guess Q2 implies quarterly. This is a Solana report that we're doing every single quarter from now on out. This is being live streamed right now on Bankless Twitter, I should say X, and also on YouTube. So what are we doing here? What are you in store for? So imagine if Solana had a quarterly report for token holders, for owners of the SOL token. That's what this is. And imagine further if it was presented back in a quarterly earnings call. That's what Mike and I are about to do today. I'll formally introduce you to Mike in just a second, but a few housekeeping notes. One is that you can access the full Solana Q2 report, everything we're publishing here and talking about in today's call, and then much more. You can access that at the DeFiReport.io. We'll include a link in the show notes. And also want to let you know that the data provided on this call and in this report is compiled from public on-chain data sets prepared by the DeFi report and by additional data partners within crypto. It's provided as a public service. It's not at all affiliated with the Solana Foundation, and it is unaudited. This call is being recorded right now. It's going to be archived on the Bankless YouTube channel within 24 hours, actually, right after this call. Further, if you are participating in this call, if you're viewing it live, we will be taking questions at the end. Okay, so think through what you want to ask. In order to ask a question, if you're on X, there's a chat room. You can leave your question there. One of our moderators will pick it up and get it over to myself and Mike. Also on YouTube, you can leave your question in the chat room. We'll probably run this for 30 minutes. We're going to make efficient use of our time. We'll have some opening remarks. We'll do a state of the network, dive into the reports, dive into the analytics and the numbers, the on-chain numbers. We'll do the Q&A if we have any questions, and then we'll end with some closing remarks. This is a question to Mike Nato, who is my co-host on the Solana report for this quarter. Why are we doing these quarterly reports, Mike? What's the purpose here?
Yeah, thanks for having me, Ryan. Super excited to do this again. And just a quick shout out to Bankless for giving us the platform here to share our objective research. And the reason we're here is we think token holders, in this case SOL holders, need a place to go where they can understand not just the network fundamentals and sort of how value is flowing through the chain, but also how that accrues to them as SOL holders. And so that is what this report is designed to cover. This is really the culmination of 4 years in the space, really solving our own problems as investors and working with a lot of the other data companies in the space in doing so. So really want to just give a quick shout out to the other data providers. Most of the data here is sourced by the DeFi report. We do have some data in here from Dune. We leverage this through Dune dashboards, so people can access our dashboards through this report. But we also, work with Glassnode, Token Terminal. We have some data from Artemis in here, Blockworks Research, DeFi Llama, RWA.xyz. And so just shout out to those data providers helping to build standards for this industry. And so, yeah, I think we're ready to dive in here.
Yeah, that's great. So you can access those Dune Analytics, all the charts you see in this earnings call on Dune Analytics, and you can type in the SOL report, and that'll get you where you need to go. All right, Mike, let's get started. Why don't we start with some opening remarks? So a question about highlights for Q2 2025 for Solana and for SOL, the asset. What were the highlights, would you say?
So key highlights, I think, Solana had a record-breaking Q1, a lot of on-chain activity. Solana is all about efficiency and sort of transaction volume that really drives the value to SOL holders. And so coming on the heels of the record-breaking Q1, I would say Q2, a little bit more of a cooling off period, I would say for the network. A lot of the on-chain economics were down for the quarter. And I think we will get into some of this and show that through the efficiency metrics of the chain as we get into this report. But to me, I think that's the high level, is a bit of a cooling off period, and transaction volumes and on-chain economics were down a little bit, which we'll get into.
Okay, well, let's get into it. So operating performance. Let's start with real economic value. So the acronym for this is REV. What are we looking at on the quarter?
Yeah, starting with Rev, and shout out to Blockworks for helping to standardize this metric. This is looking at base fees, priority fees, MEV tips, and vote fees that impact SOL token holder value. And for the quarter, Solana did $271 million in REV. That was down 67% from Q1, and that's primarily driven. You'll notice that that chart, most of it is pink, and that is Jito tips. So most of the value that accrues to SOL holders is actually MEV. This is slightly different. We did Ethereum earlier today, and Ethereum is sort of dominated more a little bit by the base fees. Solana's base fees are constant, and so it's really about state contention and MEV driving value to SOL holders. So that's kind of the main driver there. Priority fees were also down about 72% on the quarter. And in terms of just like the makeup of those two numbers, 55% of Solana's REV in Q2 came from Jito tips. That's the MEV portion, and 35% came from priority fees.
Is part of the story for why we're down so much relative to Q1 just that Q1 was obscenely strong?
I think so. I think that's a lot of it. Solana's had a pretty good run the last few years. You can see in that chart that in Q1 we had a spike up to $50 million in revenue in one day. I think that might have been the day that Trump launched the meme coin, and things really peaked out. And I think we've sort of kind of leveling off and getting back to a more steady state, I would say, for the network in Q2.
Well, let's talk about how Rev relates to real on chain yield and then also total on chain yield. But first, real on chain yield. Can you explain this one?
Yeah, so real on-chain yield, again, token holder perspective here. So on Solana, the token holders get access to the Jito tips. So that's all that's getting included here is Jito tips that become available to Sol holders through staking. And the average real yield in terms of like an APY for the quarter was 1%. That was down 54% on the quarter, and that's primarily due to Jito tips again being down 66%. The amount of SOL staked will impact this yield as well. SOL staked was up 1.5%, so that also had an impact on the real on-chain yield.
So, what's the difference then between real on chain yield and total on chain yield? I guess the total on chain yield number that we're showing here, this is nominal yield. And so it's not real because you have to subtract what issuance from
Correct.
the
Yeah,
previous number.
that's right. So the big difference here is real on-chain yield is coming from users, right? So it's coming from MEV, state contention, and access to block space coming from users only. And then the total on-chain yield is coming from users plus network issuance. And so Solana has higher network issuance, and so the total on-chain yield was 7.9% in terms of an APY average for the quarter. That was down just 14.5%. And that's primarily because issuance is making up most of this yield. So the issuance is 88%. And the real piece of that total yield is 12%. It's the remaining portion there.
And Solana's annual issuance right now, just issuance itself, is what around you 4.5 to 5%. I think this says 4.95% in Q2.
Yep. Yeah. So issuance. So Solana's issuance is just on a sort of dropping on a steady state. So it's not based on the SOL staked or anything like that. It just sort of declines about 1.5% per year. And so issuance was down a little. I'm sorry, it's actually declining 8% per year, and trying to get down to 1.5% at its steady state. And
Ah,
issuance was down 4.9% in Q2. So.
all right, let's talk a little bit about some of the efficiency KPIs that you have here. So this is DeFi velocity. What is this showing us?
Yeah, as we mentioned, Solana, it's all about just efficiency and velocity. And so we look at this DeFi velocity metric. This is a big indicator of sort of what's happening on chain here. And DeFi velocity was down 42% for the quarter. What this is measuring is DEX volumes divided by TVL. So it's telling you the turnover rate of all the TVL that's in Solana DeFi. And when you see like we finished the quarter just under zero point 0.4 there, it's essentially telling you that roughly 40% of Solana's TVL is turning over on a daily basis. When that's over one, it means that all of the TVL within Solana is actually moving
Wow.
and turning over in a single day. That was occurring on a regular basis in Q1. It dropped off a little bit in Q2, and it's primarily due to the DEX volume. So Radium was down 69% in Q2. Meteor was down 56%. Orca was down 41%, and Pump.Fun was down 31% in the quarter.
And as a sole token holder, do you want to see higher velocity? Because does higher velocity infer more MEV collection, therefore more real yield going back to token holders?
That's right. That's right. So a rising DeFi velocity factor, and we also look at stablecoins as well, is good for value accrual to SOL holders.
Okay, let's keep moving. Effective stablecoin velocity. So this is that same metric, except applied exclusively to stablecoins on Solana. Is that correct?
That's right. And this is filtered. So we do strip out a lot of wash trading and any circular transactions that we find on chain. This was at 0.042 for the quarter. So that's kind of telling you about 4% of the stablecoin supply is turning over on a daily basis. That was down 46% in Q2. That's primarily due to USDT volume being down 31% and USDC volume being down 27%. The stablecoin supply, which is the denominator here, that was also down 14% in Q2.
Okay, so Solana lost some stablecoins in terms of the assets on the chain in Q2.
Lost some stablecoins that were on the chain in Q2, and also lost some velocity as well there. Yep.
How about this? Rev divided by active address. What is this showing us?
Yes. So rev divided by act. This is telling us the real economic value per active address, and this is essentially giving you an idea of how good the chain is at turning active users into REV. So for the quarter, it was 0.67%. That was down, I believe, 56%. This is driven primarily by real economic value, which we went over, being down 67% for the quarter, and also active users were down about 11%.
And what does that imply for the cost to produce $1 of real economic value on Solana?
So yeah, so this is an interesting metric. This is really showing more about how good is the chain at converting its security expense that they have to pay out to the validators of the network. How good
Hmm.
is it at turning that into real economic value? And so what this is telling us is that it was up a little bit. It was up about 70% in Q2, and this is primarily again driven by REV being down 67%, and then your issuance was down as well, which factors into that metric.
So those were the efficiency metrics of this relatively high velocity chain. Let's talk about the token economics for Sol, the asset itself. Maybe we'll start with issuance. What do you see on the quarter?
Yeah, so SOL issuance was down 4.9% on the quarter. As we mentioned in the beginning, Solana's issuance is it's standardized, so it's just dropping at a rate of about 8% per year. This is like a 15% disinflation rate that's applied per epoch, so it's sort of a smoothing process of it disinflating over time, and so the difference here, if you're also an ETH holder, is that this is not impacted by more SOL being staked, which it does. So ETH issuance would be impacted by more ETH being staked. This is not impacted. It's just on a set schedule.
Interesting. Okay. And then Sol, as well as ETH, has a burn mechanism here. So what do we see in the Sol burn numbers?
That's right. Yeah, and a major, sort of cliff here occurred actually in Q1. Maybe just to start with the Q2 numbers, Sol burned about 80 almost 84,000 Sol for the quarter. That was down 88% from Q1. And a lot of this has to do with a protocol upgrade that occurred in February of this year. That was the SIMD 96 protocol upgrade. What that did is it shifted 100% of the priority fees to validators. Previously, before that was implemented, half of those fees were being burned, which is why that chart was sort of up and to the right as the network was seeing more on-chain activity earlier this year, and then it just dropped off because those fees are no longer those priority fees are no longer being burned. They're accruing to validators, and if you're a SOL holder, right now that value is being kept by the validators themselves. There are potentially some changes coming there where validators are going to start sharing some of those priority fees with stakers. But that's the reason why the SOL burned was down so much in Q2.
I see. So this amount goes to validators now, not yet staked SOL holders. It's just sticking with validators.
Correct. It used to be half burned. Now it's with validators, and it looks like some of that's going to come back to SOL holders.
How about SOL issuance? Actually, sorry, circulating supply. So I guess this is a culmination of all of these metrics together. What does that look like?
That's right. So, if there are, what's interesting here is you do still have some Solana unlocks happening. So with Ethereum, there's no unlocks. With Solana, there are some unlocks. So this is factoring in not just your issuance less your burn, but it's also factoring in these unlocks. We mentioned that the issuance was down 4.9% for the quarter. Sol burn down 88%. What is sort of causing this 4% increase in the circulating supply is these unlocks that were related to the FTX estate that sort of leaked into Q2, and those were fairly large unlocks. And so this is impacting the total circulating supply. This does not get expressed through the protocol, net dilution rate, which we'll get to in a minute here. But important for people to understand that there were unlocks that is dilutive to SOL holders.
At this point, what is the circulating supply relative to the total diluted supply? So the total amount of SOL tokens in existence.
So yeah, so if we go to the next chart there, if we go to the net dilution rate, this is giving you if you're a SOL holder and you want to understand, how much are you being diluted just by holding that token, just from protocol issuance versus burn, it's 5.2%. From an annualized perspective, that was the average for the quarter. And so significantly higher than Ethereum and some other networks. Solana is a newer network, and I think that's part of why the issuance is still higher, and why the net dilution is at that 5.2% figure. Again, this impacts you as a SOL holder if you are not staking the asset. If you're staking the asset, you capture that issuance, you capture the MEV on the network.
You capture that in a nominal way. And is there a way to see how much more SOL is to be unlocked in future quarters?
Yeah, so the last unlock was one of the large ones. There is still I don't have the number off the top of my head, so we can follow up with this piece, but there's still some more unlocks coming before all of the circulating supply is fully into the market.
Okay, let's switch to network fundamentals here. Daily active addresses. What are we looking at in the quarter?
Yeah, so you can see this chart. It was down in Q2, but it's a good looking chart. It's showing secular growth here. Solana averaged 4.7 million active addresses for the quarter. That was down 11%. We talked a lot about this a little bit in the beginning. It was kind of a cooling off period in Q2 for Solana. Less DEX volumes, less speculative activity on chain, and also pump.fun new token issuance was down 27%, and so this is impacting active users on the network.
What do we see when we look at real world assets on Solana?
Growing. So this chart looks pretty good. This is mostly U.S. Treasury debt. Solana has about $390 million of real world assets. We're not counting stablecoins in this. We have separate data for the stablecoins. But 390 million, that was up 24%, largely driven by U.S. Treasuries and non-government U.S. debt. That was up for the quarter.
The amount of SOL staked, are we close to all-time highs there?
We are close to all-time highs, not quite at all-time highs, but close to it. So there's 390 million souls staked on the network. That's almost 2/3 of the total stake, so much higher stake rate than Ethereum. That was up 1.5% in the quarter, which indicates a desire for soul holders to capture the real yield plus the issuance. 96, I think, a very interesting stat related to Sol staked. 96.6% of all Solana staked on the network is with validators that are running Jito, right? So that makes sense if you're a Sol holder. Jito is the way that you get access to MEV on the network. And so Jito is an incredibly important protocol within the Solana ecosystem,
Is one of the
especially for
mess-
Sol holders. Yeah.
is one of the messages for Sol token holders that if they're holding Sol for a longer period of time, even a medium-term time horizon, that they should be staking so that they benefit from this yield?
I think so. I think so. That comes with risk, right? That comes with smart contract risk. But I think it's something that you have to consider, given that if you're not staking the asset, you're being diluted at a 5.2% clip just from the protocol, and then you have to factor in the unlocks as well.
Total value locked. What's the story here?
Yeah, so TVL, good looking chart, moving up and to the right here. So Solana has about, much lower TVL than like the Ethereum network. But we saw earlier it sort of turns over the assets under management at a higher clip. So 8.6 billion in TVL, that was up 30% in Q2. Some of the drivers of this were Sanctum, liquid staking solution on Solana was up 76%. Camino, this is lending, up 31%. Jito provides MEV, also staking, 29%, was up 29%. Jito was up 20. I'm sorry, Jupiter was up 23%. And of course, we need to mention that TVL is also driven by the price of the assets, price of Sol. So the Sol price was up 24% on the quarter, which impacts that TVL number.
And finally, we've got new trading tokens. So there's some growth here, but it was down in the quarter. Tell us about this.
Yeah, so this is kind of the story, I think, for Solana over the last year or two. You can see that chart really starts to like take off, really from zero just last year, right? And this is mostly pump.fun. A lot of the sort of speculative activity originates through pump.fun through these new trading tokens. And so we saw over 3 million tokens on Solana launched through these launch pads in Q2. That was down from the sort of peak speculative activity that we saw in Q1. It was down 18% in total. That's mostly driven by pump.fun, which is about 87% of this sort of new trading token market, 87% of the sort of launch pad market on Solana.
So that is the selection of charts that we wanted to show in this earnings call. And for our audience listeners, if you have any questions, we will take questions if there are any from the audience. If not, we'll just move to closing thoughts. And again, the way you get that through is on Twitter. Just get into the chat room, ask your question. We'll pull it out, or on YouTube, do that as well. So now's the time to do that. If not, then we'll just move on to closing remarks. There are a few things we didn't cover in today's call, Mike, that are, I think, included in the report. So what didn't we cover? I guess maybe details on stablecoins, fair value, correlation type metrics. What else can people look forward to in the full report?
Yeah, this is just a smaller subset of the data to try to tell the story a little bit for the quarter for this call. The report has data. We have a number of metrics that we measure to look at what we think are decent fair value metrics, a number of correlation metrics as well for investors to look at. There's a section on stablecoins in there that gets into the velocity, that gets into stablecoin supply and some of the drivers of the change with stablecoins on chain. And of course, you can access our Dune dashboards as well, and all of that data is on chain, and people can look at that, verify that data, and it's real time as well. So
you can get that on Dune, of course. Go search for the Soul Report, and the full report itself is at the DeFi Report.io. Doesn't look like there's any questions that came in, Mike. So why don't we move to your closing thoughts? So as a Sol token holder, how should they be feeling about this Q2, and what should they be looking at?
Yeah, so I think looking at to me, everything with Solana is related to efficiency and native token issuance. Those were the two drivers of really most of the activity in Q1. So DEX volumes, and then this chart we're showing here, the new trading tokens. And so I think if you're a Sol holder, what you're looking to see here is more activity in DeFi, more DEX trading activity, more interest, more retail interest in crypto. And then you're looking to see these launch pads, you'll pick up again. What something that I'm looking to see is like a way for these launch pads to maybe just bring more transparency to the market, and kind of do this in a way where I think some of the traders feel like there's just a little more transparency behind things. I think this is probably one of the things Solana is focused on right now, is getting as many tokens trading, doing it in a way where token holders feel they have the transparency and sort of the protections needed to participate in these markets responsibly. Do that and get these tokens issued and then trading within DeFi, and that's really what drives value. It drives economic activity throughout the network, and it also drives value and MEV to Sol holders as well. So that's what I would be looking for.
Well, it's great. It's been an efficient call too, Mike. So thank you so much for preparing this. We'll close it there. There's a call transcript, the deck, everything else. You can find that on Bankless YouTube. Also, the DeFi report for the full report. Also, we mentioned Dune. The next time we do one of these Solana quarterly reports will be October 15th. So mark your calendar. That'll be at the end of Q3. And of course, we'll have the full summary for the quarter then, and we'll repeat this back. We'll do an earnings call and the rest. Also, Mike and I will have a more opinionated episode for you. So this is very neutral, just the numbers, just the facts. But Mike has some investor opinions on Solana, the network, and other networks as well. If you want to catch that, we'll have some Bankless podcasts coming up later in the week. So go search Bankless and subscribe there for that. All right, we're going to end it there. Thank you so much for joining us.